The stock market had a waterfall sell-off in the past few days. Is this the beginning of a much larger move down, the second phase of the crash like we had in March? Or is this just a little bit of pre-election volatility with much higher highs coming? So in the last video we made, the stock market was above this support level right here, the 3,400 point level. And the main point of the video was that the stock market had turned bullish here. A bullish stock market is a fragile market. It wasn't extremely bullish, but it was definitely more bullish than what we had throughout this entire rally. And we said you don't want to be in a fragile market in front of a high risk event like the presidential election and the rising number of cases. So the stock market broke this important level, the S&P 500 broke the 3,400 point level, and we had a waterfall sell-off to the next support level. This is something we expected. Buying at support was risky, and you absolutely had to have a stop loss below this level to cut your losses. Now, is this volatility going to continue? And to answer that question, we're going to take a look at the volatility index. This is the VIX, it's the volatility of the S&P 500, and we were looking at this specific trend line right here, which had so far contained every correction on the S&P 500, and we recently broke out right here. Now this morning someone asked me in the trading room on gameoftrades.net if this was an opportunity to go bullish on the VIX. It did just break out of a long-term downtrend, so some traders may see this as a buy signal. If we have a much bigger spike in volatility taking us back to 75 or 80, that could mean another 20, 30, 40% drop in the S&P 500 and definitely retest the lows that we made in March. So we're going to zoom out and see how the volatility is likely to progress in the next few days, few weeks. This is a weekly chart of the volatility, and you'll see this is the spike that we just had that dipped into the 40-point range on the VIX. Now what I'm going to do here is I'm going to put a horizontal line at 40 and a horizontal line at 50 right here. And this shows us the number of times the VIX, so the volatility, dipped into this range. So here we've put arrows on each of these occasions. And over the last 30 years, we've had 10 separate occasions where that's happened. And in 8 out of those 10 times, the volatility reversed very quickly after having dipped into that range. So that was my answer to the member of the trading room. This is your odds of having a profitable trade trying to go long on the VIX if you're looking at historical data. So a short on the VIX is much more likely to be profitable than a long on the VIX. Now the question is, what happened those 2 times out of the 10? What were the causes for these major spikes? And are those issues that we should be worried about today with this spike? By the way, this is usually the moment in the video where I ask for you to click the like button. These videos do take some time to prepare. If you want more content like this, don't hesitate to let us know by smashing the like button. So in 2008, we had an insolvency crisis in the banking sector. So that was the cause for major volatility in 2008. Now fast forward to 2020, we had a liquidity crisis. So are those 2 issues something that we should be worried about today? So first of all, let's address the liquidity problem. The Federal Reserve has expanded their balance sheet from $4 trillion to $7 trillion. This is not news, but it's easy to forget things that have happened in the past. This is still liquidity that's flowing into the markets. Liquidity right now is not the problem. Now, what about insolvency? And if you've been a part of this channel for a while or a member at gameoftrades.net, you'll know that insolvency is something that we're worried about. So is that a problem today? For now, there is still no sign of a new wave of bankruptcies in the economy. Bankruptcy numbers are still stable. Now we know that these numbers are going to increase sometime in the near future, probably within the next 6 months. that's something that is inevitable. So could we see a domino effect right now with the stock market tanking and bankruptcy numbers rising at the same time? Absolutely. It's not our preferred scenario, but it is something that can happen. So right now we're closely watching 3 things that are going to tell us how we're going to trade the markets in the next few days, in the next few weeks. So first of all, of course, the bankruptcy numbers, that's something to watch, although it can be a lagging indicator. So that's something to pay attention to, but not to rely on 100%. Next, we can look at the credit market, JNK. This is the high yield bond ETF. If the high yield bonds are holding up, it means the credit markets are somewhat stable. And so far, it does look like they're remaining stable. We have a support level here. It's the bottom of this gap here. It was tagged here. We have a reaction there as well. And we're currently above that support level. If the credit markets start to make a lower low here, that's bad news. That's something to watch out for. And we can look at how JNK was during 2008. This is what high yield bonds look like during an insolvency crisis. It's a meltdown. Now, the last thing we look at is, of course, the technical picture on the S&P 500, indicating how the broad market is doing right now. Now, as we said, we broke that strong support level and we're down to this support level right now. The 3,390 point level is now resistance. Now we're coming down to this area close to the 3,200 point level. This is a major level. In fact, this is a major zone of support. And I'm going to show you what I mean. We're going to zoom out a little bit and you can see every time the price enters this zone, we have a consolidation or a reaction. A consolidation here, here, we have a reaction here, consolidation here, a reaction here, and now we're entering this zone right now. So I'm going to highlight the zone right here so you can see it clearly. This is what I see on the technical picture right now, and this is what's holding up a higher low on the markets right now. Now, if the markets slice through this support, that's incredibly bearish. Why is that bearish? Because we'll have a lower low. We'll have a lower high and a lower low. We'll be officially in a downtrend. And that's when we're going to be officially flipping our strategy from looking for longs to looking for shorting opportunities. And you'll notice this is the first time we're seriously talking about that. Throughout this entire period right here, we said this is just a correction. We're going to get a bounce. Now the stock market is at the same point, but it's starting to get dangerous. So if that happens, we will be shorting the markets like we were doing throughout this entire period. But again, that is far from being our preferred scenario. This is not the time to panic just yet. So far, this looks like a little bit of pre-election volatility. In fact, we can compare this volatility to other pre-election periods and see if this is out of the ordinary. So let's go back to the VIX index and do just that. Now, so far, this spike in volatility started here and has spiked at 70% increase. Now, let's check out the 2016 elections. We'll zoom in here and you'll see this is a pre-election spike in volatility. Let's measure it out. From the bottom to the top, this was a 100% increase in volatility. So 2020 actually had a smaller spike in volatility than 2016, at least for the time being. Now let's go back to 2012 and we're going to zoom in from the bottom to the top right before the election. That's a 50% spike in volatility. Now we're going to go back even further. Not 2008 because that was the financial crisis. We're not going to include that in our study, but we're going to go back to 2004 and we're going to zoom in right here. Again, we had a spike in volatility just before the election, and that was another 55% spike in volatility. So far, the move we've seen in volatility, the move we've seen in the stock market is nothing unusual for a pre-election period. We are not at that panic point just yet. We are still above a huge line of support on the broad market, and the fundamental factors that are pushing the market higher are still very much intact. Now, if you want to check out this charting platform, make sure to click the link in the description below. You'll also find the link to our website at gameoftrades.net, where we post premium content. You can see this is a small preview of what we have on the site. We're making stock market updates, pre-market, post-market. We're looking at other asset classes like Bitcoin. We also take a look at specific stocks. We look at gold, silver, and investing strategies for the long term. Now, that's about all I wanted to cover in this video. If you enjoyed, make sure to drop a like and subscribe to the channel if you haven't already. In the meantime, good luck on your trading and see you next time.